Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, and today I have with me John Harvey, founder and CEO at CrashBay and founder of insurtech Canada. John, how's it going today?
It's a wonderful day, Tony. This is a long time coming. It's a real pleasure to be here with you. Before the recorder got turned on, we were talking about my collection of Tony Cañas cards. This is my third in my baseball collection. I'm going to keep this because I know it's going to be a collector's item someday. And we finally got here because I think the first time you handed me one of these cards was at an ITC, maybe back in 2021. So I'm honored to be here.
My pleasure. Thank you for being on. 3 years is a long time to procrastinate on coming on the podcast. And you're probably not the worst one ever. So
thank you.
Thank you for finally making it.
I'll take the label. I wear it with pride. Yeah.
Perfect. And you are in Toronto, right? We're recording middle of January. So I'm assuming it looks beautiful outside your window. Like I was expecting a just snow covered, winter wonderland.
Yeah. It's deceiving. Like there's some white stuff on the ground still just back here, but it was actually snowing pretty heavily last night and it warmed up. So we like to measure in Celsius here. I know it's a little backwards, but so we're probably like 18 degrees here, 15 to 18 degrees. So that would be double and add 30. So
18 degrees, probably 50s in Fahrenheit. So actually very decent for the like.
Oh, sorry. I meant to say 8 degrees. Sorry, not 18.
Oh,
yeah.
Okay. So 8.
Yeah.
Probably
so like
40s.
Yeah, that's right. That's
so
right.
Yeah, that's chilly, not awful, but
like we're for Canadians, we'll just wear like a regular zip up, and we're good to go. Like there's going to be people breaking out their shorts right now.
Okay, awesome. I've actually never been to Toronto. I've been to Montreal and Calgary, but Amplify Broker Tech Fest is moving to Toronto this year, so I'll be in Toronto for the first time for that. So very excited about actually seeing Toronto.
That'll be great to host. Yeah.
Awesome. So we always give the guests a chance to give the elevator pitch. What is CrashBay?
Yeah, thanks for the opportunity, Tony. So CrashBay, we're a digital marketplace for collision repair. CrashBay was an idea 6 years ago. And where that idea came from was inspired by looking at other industries, looking at like the travel and tourism industry, restaurants. If you want to rent a car, you can go on Turo and you can rent someone's car there, a marketplace. Airbnb, if you want to book a hotel or book a cottage or a chalet, you can rent that on Airbnb. Expedia, you don't have to go to a chain hotel. You can go to independent hotels. You have all the maximum variety. And all these businesses are accessible individually, but marketplaces kind of bring them all together. So I was inspired by the marketplaces that exist that I interact with as a consumer. And I always say I'm an accidental claims guy. I'm an accidental insurance guy. I studied business a little over 22 years ago. I'm dating myself. I never thought I would work in insurance, but I got my first job with an insurance carrier doing claims intake. I was working in a call center, setting up F&OL claims. And so I've lived through that kind of industry and I know what it feels like on the policyholder side to have a claim. I know the pain that a carrier goes through to process a claim. I jumped over to the supply side in 2015 and I worked for a big franchisor in the space that provides collision repair services to major insurance companies. So I spent 4 years there as an executive. So I understand, the pains on the shop side as well. And I thought, there's some problems that need to be solved here. And I think the future, and we strongly believe this, me and my co-founders, the future of this space is the marketplace model. And we can unpack that a little bit more, but our mission is to connect car owners and carriers with trusted repair shops in a digital marketplace. So we sit over top of that supply chain and we roll up all the various types of collision repair shops that are out there. And I can unpack that, but that's the short version.
Okay, perfect. So I started at FNOL. Also, we called it Express Claims. So we kept the claim and kind of worked the simple ones. And that was Farm Bureau of Iowa, 2009. And they were actually ahead of the game we took the claim. If we kept it, if we didn't have to send it to a field adjuster,
Yes.
we would tell the client, take the car to any shop you want, send us, fax us at that time, fax us the estimate, and we'll have you paid today, right? And we would basically, when the estimate came in, we would send it to
Review desk or something.
Yeah, well, exactly. One of the services that would review it and take OEMs off if the car was older than 2 years old, kind of thing.
Yeah.
And just make sure that it was a fair estimate, and we would pay it. Then I went to Nationwide, and at Nationwide they did have their own DRP or direct repair program, right? And there it was hey, if you take it to one of our DRP shops, then it's absolutely kind of hands off, and but you have the choice of taking wherever you want.
Yeah.
So but that's as deep as I got it. I didn't go any deeper into the claim side. I went to underwriting.
Yeah.
So it worked. It wasn't particularly.
Was it the best thing for the customer? Was it the best thing for the carrier? We can unpack that.
Yeah. So I guess what I'm getting to, I'm curious. Why is a marketplace solution better, especially given that most larger carriers already have a DRP? So if I don't have a DRP, right? If I'm Farm Bureau back when I was there and I don't have a DRP, then I can definitely see how this gives me some advantages. But if I already have a DRP, why would CrashBay be a good idea?
It's a beautiful question, and there's a lot there to unpack, and it's exactly what we should be talking about. I'll start really quickly with, the first example that you mentioned was, just getting an estimate and cashing it out, getting it approved. There are companies today that still use that model. They use technology tools to do that. They'll get estimates written and then they'll cash out. And there's actually some well-known insurtechs that actually run their claims process that way. Problem with that, and actually one of our big customers, we got them off that cash out model, is those cars still have to get fixed at some point.
Mm-hmm.
And if they want to keep their physical damage coverage, they have to get fixed. Otherwise, they're going to only be liability only coverage. So we solved that problem in getting that to a qualified repair shop. There's lots of reasons why companies cash out. Sometimes it's because they're smaller, they're at the back of the line, and they're going to wait too long to get booked in, and they want to close that claim, right?
Mm-hmm.
So I'm an insurance company. I want to get that reserve closed. I want to get that risk off my books so I can redeploy that capital. And so cashing out makes sense to them, and it's low touch. But ultimately, we come in and we take over at that point. We make sure that it gets to a qualified shop to get repaired so it can get back on the road. But I'll go in deeper into your second question there. Why do insurance companies need us if they already have a DRP solution? And, I mentioned part of my history. I started at an insurance carrier. We were a well-known brand, bank-owned insurance company, but we were not a top 10. And some of my co-founders, they come from the industry as well. Andrew Daniels, he worked at Allstate, so he worked for a top 10 insurer in the U.S. And our other co-founders, Bing Wong, he worked at CarStar, and Jeff Keddy worked at Fix Auto. So we understand intimately both sides of the marketplace and the pain points. So if we get into the pain points, and I'm gonna rewind the clock a little bit here, pre-pandemic. So 2019, there was a massive capacity issue in the collision repair industry. And even big insurance companies like the top 10s, I won't name names, but the top 10s in Canada and the US, we know them very well. We're very close to them because we operate in both countries. And they were waiting 6 weeks, 8 weeks, sometimes 10 weeks to get a repairable or a drivable vehicle into a shop just to get the estimate process started. And the shops or the insurance carriers that use that DRP solution, it's more cost effective than dispatching a field appraiser. And some customers don't want to take pictures of their car, to start that estimating process. It's a very small percentage that still do that. And so waiting 6 to 8 to 10 weeks, that was our first sign, me and my co-founders, when we sat around the table, to say, there's a capacity issue. There's a bottleneck here. Why is there a bottleneck? And so if we get into unpacking why that is, you have in the US and Canada combined, there's about 35,000 to 40,000 licensed auto body shops that are operating today. And those shops fall under various groups, ownership groups. Some of them are independent mom and pop shops that are second, third generation family businesses, maybe started by the grandparents, passed down in the family. Now the grandkids are taking over and operating. We have dealership owned shops that are owned by like a Ford dealer or a Honda or a Tesla dealer. They've got a body shop or collision shop in the back or maybe off site. Then you've got corporately owned multi-store owner groups. Some of these are big private equity backed or publicly traded companies that own hundreds of shops coast to coast. And then you have these big networks like the franchise groups that also operate and have hundreds of shops coast to coast in every state. The tendency for top 10 carriers is to use the big network shops because it's more streamlined and it's more scalable. One point of contact, I get access to hundreds of shops. Sounds logical and makes a lot of sense. The problem is that only represents about 40 to 50% of the available collision repair capacity in the market. So the market's very fragmented still. The other 50% of the industry is still independently owned. Sometimes even when they're in a network, they change networks, they leave networks, they go back to being independent because that was just a phase in their business. So back in the 80s, and I'll try not to bore everyone too much with the details, but this new idea of bringing franchising and bringing network solutions into collision repair was a brand new idea. And very similar to the restaurant industry, if you think about the parallels. You can go to a chain restaurant or you can go to an independently owned family-run restaurant, right? But, chain restaurants took off. There's still lots of good independent restaurants, and sometimes people prefer going to those, right? The network solution or franchise solution was supposed to solve the fragmentation in the supply chain on the shop side and consolidate the industry. And that never happened to the full extent. It's still very fragmented with over 50% of the industry being independently owned. And so that's the reason why today it's even worse, especially if you're not a top 10 insurance company. You're waiting sometimes 10, 12 weeks, especially if there's inclement weather, to get your cars in for repairs. And that's why this particular problem is perfect for the marketplace model. Because what the marketplace model does is it rolls up a fragmented supply chain into one ecosystem. And so now what we're able to do when we start working with new carriers is we take those, they call them lead times when they're waiting to get estimates booked in. And then there's a second appointment sometimes to get a repair booked in. We can cut those lead times in half and get them from waiting 8 weeks to get a car repaired or in for an estimate down to 4 weeks or even less. Because what we're doing is we're sitting over top the entire supply chain. We don't own any shops. We never will. We never want to. We don't franchise. We simply work with those groups to connect them into a common ecosystem. And then we give that digital connection to the insurance carriers to be able to access a larger variety and capacity of shops. So it's a long answer, but it's a more complicated problem than most people think about. Because, like auto collision in claims, it sounds like a very simple business model. And the business model itself isn't overly complicated. But getting access to those thousands, like I said earlier, 35, 40,000 shops is challenging without technology. And the only way to solve it is with a technology solution. And that's why the digital marketplace, again, we believe is the solution. And the really cool thing about it, Tony, is it levels the playing field for the small guys now to compete with the big guys, because we can go down to any market. So right now we operate in all 50 states and all 10 provinces. So we're fully operational in both countries, and we can go into a market like California, pick Los Angeles, for example, and you've got a variety of network shops, dealer-owned shops, and independent mom-and-pop shops. We can list all of those once they go through our qualification and onboarding criteria in our marketplace, give access to insurance carriers through our technology tools to that variety of shops, and then now they can compete for the business. And it's a performance-driven, merit-driven, standardized process. And now the insurance companies, what it leads to for them and the customer, let's not forget the policyholder in this, is they have more choice. Because ultimately, that's what we want to do. We want to provide maximum variety and choice for the policyholder who has a say in all of this, because they ultimately decide where their car goes. They don't have to say yes to the insurance company recommendation, and to give that maximum variety and choice to the insurance carrier, which ultimately increases the carrier's ability to get that policyholder to say yes if they're providing them with more choice.
Right. That is so interesting. What really clicked with me is the carriers tend to use multi-store shops. That makes perfect sense. It's just safer from their perspective, right? And they're risk averse.
Yeah.
And what I had no idea, like that was not a surprising thing, but what I had no idea is that 50% of repair capacity is mom and pop shops. So yeah, of course that capacity was invisible.
Yeah. And some of it is like some of these mom and pop shops have grown into pretty sophisticated operations. Some of them may have started as like a single store operator in Houston, Texas, and then they went out to the suburbs and they opened up a second store for overflow to capture those commuters, and then they grew into 6 stores. We have these we call them mini MSOs, multi-store owner groups, that are all over North America. And, some of them get up to 20 stores, and then private equity comes in and buys them. And then, they become 50 store MSOs. And some of them just say, I'm going to circle this geographical area. And they've got family members and friends and community people working in their shops, and they're running 3 or 4 or 5 shops, but they're still independently owned.
Okay. And so getting the car to the right shop.
Yeah.
Availability is a piece of it.
Yes.
But often we're talking about towing a car, which gets expensive. So I'm just curious, is there pretty much always availability locally, like as long as you live in a medium-sized city?
Sorry, finish your question.
Or like at times we're towing cars 100 miles, so 150 kilometers, because that's where there's availability to fix it.
Yeah, great question, Tony. We always try to work within like a 25-mile radius maximum, because we know people won't drive further. And even in some like heavy metropolitan areas, they won't even drive 10 miles, because like in big cities, driving 10 miles can take 40 minutes, right, to an hour. And your question about like towing, still the vast majority, it's still about 60 to 70% are drivable vehicles that are out there. But there are vehicles that have to get towed because they're non-drivable, and that's becoming a little bit more common than it used to be because of all the technology on vehicles now. And so something that may have not made a car non-drivable 10 years ago is now considered non-drivable. So in those situations, again, we work with the shops locally to find the closest solution. And a lot of cases, this is the beauty of the marketplace model, okay? So our highest concentration of shops are always where we have the most volume, right? And I mentioned earlier, we operate in 50 states and 10 provinces, but our volume isn't meaningful in every single market. There's markets where we've only sent a shop 1 or 2 claims in the last 3 to 6 months. So if we get a claim in a market where maybe we're in a suburb or we're outside of a primary market for us, that's an opportunity for us to reach out to shops in that area and say, hey, have you heard about CrashBay? We have a live claim here. You can go through the application process because all of our onboarding is digital. Just like if you and I want to list our houses or our apartments on Airbnb today, we can go through digital onboarding, right? And so they still have to pass our criteria, and a lot of times our intake process is digital, but we verify every single appointment. Every single appointment goes through human verification. And if we have exceptions like our algorithm, our locator can't find a match within that sweet spot driving radius, then our intake team will reach out to local shops in that area and say, we have a live lead. Here's a link to create a membership. And if you pass the qualification criteria, and we have ways to fast track them if they're certified as a Tesla shop, for example, and it's a Tesla vehicle. If they've passed Tesla certification, we know that they meet the standards to be an insurance ready shop, or Honda or Toyota or any of the major OEMs. And that's actually how we recruit a lot of new shop members, is with those live claim situations. And that's unlike anything else. A network can't do that. If you're a corporately owned MSO, you got to buy the shops. So they need working capital to be able to do that. That's not going to happen on a claim by claim basis. If you're a franchisor, you've got franchise territory restrictions and you can't oversell your franchises because you've already sold those to other franchisees. So there's constraints there. But we don't have those constraints because we're a marketplace. So as long as they meet the criteria, we can bring them in.
Okay. For the carriers, what is the integration like? Does it need to plug into my Guidewire Claim Center or Duck Creek or is it the kind of thing where we just log in separately?
So it can, and that's the happy path, Tony. Ideal state is our claims management system talks to their claims management system through an API. We recently upgraded our CMS, our claims management system, to one of the well-known ones out there that dozens of carriers use. And so that allows us to have that API flow very easily from day one. So there's not a management system that we can't connect into. There is an integration path, though. It's usually not day one. I've learned the hard way that, if you try too early to force an API project or an integration project before you really get to know each other as a customer and go through a proper discovery and go through some of the test and learns, you're going to be throwing money and time and resources out the window. So happy path for us is platform integration. We usually try to get there within the first 6 to 12 months with our carrier clients. So we do have the ability to ingest those claims through our own tools, and we can stand up what we call private locators. So we go out and, there's the public face of CrashBay. If you go to our website, you can search shops and there'll be thousands of options in both countries. But then we have the private version of CrashBay, which is really our SaaS solution. So if we actually, believe it or not, run into carriers. Usually it's smaller mutuals, regionals, fleet companies, or self-insured fleets like car share, rideshare companies that maybe don't have a claims management system, or they don't have Duck Creek or Origami or Guidewire.
Yeah, they're still on their old home build.
Yeah, on-prem, right? On-prem systems or homegrown system that built 25 years ago, the DOS-based AS400 system. So in those cases, we stand up private locators for them. We'll build tools with them and to streamline their processes and give them access to our shops. And we do that. Everything's stored in our cloud and it's password protected. So a big way that we serve three main stakeholders. We serve the shops because we're here to help them grow and access programs that they couldn't necessarily access on their own or be an extension of their sales team. We're here to service the car owner because we want to give them variety and choice, as I mentioned earlier. But the carrier, we want to make it as easy as possible in a standardized way to reach as many shops as possible. So, we can do things manually. In some cases with some of our customers, we're actually logging into their claims management system and we're the ones importing documents if they don't have the ability to do an API. And Tony, like some of these insurance companies, even the medium-sized ones, getting support and resources to stand up technology integration. It can take sometimes 12 months, 18 months or longer to get approval. And then, you're in the priority queue at that point and you could get bumped. So we try not to let that stop us, but that is the ultimate end goal for us is integration.
What's the pricing? Who pays for the CrashBay service?
Great question. Our investors ask us that all the time. So as a two-sided marketplace, so we monetize on both sides of the marketplace. But right now the way it works is on the shop side, which we call the supply side. Shops can join for free. Doesn't cost anything to become a member of CrashBay. And our promise to them is actually, you're not going to pay us a penny until you get your first claim. So once we start seeing a claims flow for them and we're processing the payments, because we actually do everything through a central payment program. So digital payments is a big part of our business model. So, we take a fee for payment transactions for handling payments, just like any other payment provider. So that's one way that we make money on the shop side. And then we also sell memberships to high volume shops. So if you look at most marketplaces will have like all-star hosts, like you have all-star status in VRBO or Airbnb, Turo, and all-star Uber drivers and Lyft drivers, et cetera. So we have an all-star category for our shops. So if they're top performers, they meet a certain criteria and they're in a high volume market, we will also sell a membership to them, and that gives them some priority ranking and access to additional services. And then on the carrier side, it's through software projects. So when we start building with carriers and building customized tools for them, getting involved in claims workflow, then we monetize on that side. But that's the longer sales cycle on the insurance side. Software products have a long tail, as you know.
What are the clients saying? And I know you have basically 3 different clients. In my world, the carriers. What are the carriers that use you guys? What feedback are they giving you, and what kind of ROI are they reporting?
Good question. Yeah. So where were you really able to move the needle? I mentioned earlier, we're kind of focusing on outside of the top 10 because we feel like that right now the top 10 carriers are not feeling the pain enough for this to be a big problem for them. They will in the future because and I can get into that later, but right now we want to focus where there's a sense of urgency, there's a problem that can be solved, and we can start removing pain points. That's usually for the tier 2 insurance carriers. Like I said before, self-insured fleets, car share, rideshare companies. There's lots of companies out there that have large fleets that are carrying deductibles, $50,000 deductibles, and they're self-insuring everything under $50,000. But they don't have enough volume at the shop level to be meaningful to the shop. So if you think about it, if I'm running a shop in any market, I'm probably running my business on anywhere from 5 to 6 to 7 accounts that keep my doors open and my lights on and allow me to make payroll. And, those a lot of times are the big top 10 carriers. And if you're a smaller shop, you just don't have access to those programs. But how do we get those shops to prioritize smaller accounts? What we do is we bundle those accounts together. So we'll take 3 or 4 or 5 small accounts in a market, we'll bundle them so it now becomes meaningful and significant at the shop level. And the results, like you said, the feedback, what's the customer feedback? The customer feedback from the carriers is, you've just now helped me expedite my claims cycle time. So I'm able to close my claims faster and pay my claims faster. And so they're reducing their rental severity as a result. Their claims adjudication expenses are going down because they're not having to pay to have a vehicle assessed in the field. or to cash out a claim and have to chase that customer later to see if they actually went and got the vehicle repaired, dealing with supplements, because we take all of that away. So once a claim comes into the CrashBay environment and we've verified everything at the shop level and the car owner level, we stay with that claim until it's closed and paid. So we're able to deliver a lot of synergies, I should say efficiencies is a better word, to insurance carriers, because their adjusters, when it's a CrashBay claim, it's basically a one-touch claim. It's once and done, pay and go, because CrashBay is now monitoring the shop. We're updating the insurance carrier on the status of the repair. If the delivery date changes, we're letting them know. We're setting up dashboards and portals for them to log in to be able to see the status of the repair at any time. That drastically reduces, phone calls, claims inquiries, inbound calls going into claims call centers, because we're taking that over for them. And then we're taking over the payment management side of things. Having to manage and pay hundreds and thousands of vendors is very costly for insurance companies. And long term, that's not a sustainable strategy. Insurance companies won't have large vendor management departments to be able to manage thousands of vendors in the future. And so CrashBay is able to take that expense and that burden, that administrative burden, away from the insurance carriers. So that's some of the feedback that we get. And then, we measure CSI, we measure NPS and Google scores. We have an integration with Google My Business. So we're able to help the shops boost their scores and their profile in their communities, through those reviews that we're driving, and a better overall client experience for the customer.
Did I understand this correctly? We as the carrier, we can write CrashBay a single check at the end of the month, kind of thing.
Some of them write us a check. They send us electronic payments every day, but you're right, Tony. Yeah, so that's a bulk pay process, and instead of because in 30 days, if I'm even a medium-sized carrier, I could have thousands of claims. We deal with self-insured fleets that have 5,000-10,000 claims a month. Paying hundreds and thousands of vendors is very expensive. So they just pay one bulk payment to CrashBay. And we have an entire dedicated payments team that now redistributes that money to our shops. And one of the things that we pride ourselves on is rapid pay. So why that matters to insurance carriers, that's obviously great for shops because it helps them manage their cash flow and everything else. But on the carrier side, that's what gives them that priority service, because they're getting paid faster on those claims from CrashBay. So now they're prioritizing those claims and they want to get them, they're incentivized to get them out of the shop quicker. So yeah, that's right. It's just, we take it from hundreds of payment profiles to just pay CrashBay and we will take care of the rest.
That is fantastic.
Yeah. It's not easy. I make it sound easy. I'll give you a little bit of a quick highlight. Like you can imagine, I mentioned we started as an idea 6 years ago. We spent a lot of time I call it in the lab, conceptualizing and ironing out things for the first 3 years and building out the supply side. And with our promise to shops of like, you're not going to pay us a penny until you get your first payment from CrashBay, we had to basically operate on a freemium model for an extended period of time to build trust and goodwill with shops that we will pay them on time. Because if you can imagine, even with Airbnb or businesses as big as that or Expedia, people do not give up their banking information easily, and nor should they, right? So if we're a new entity, CrashBay, 18 months ago, we were not extremely active in the US. We got our POC in Canada. We're a new entity to a shop who's never met us before. We go through digital onboarding and then we say, give us your banking information. That doesn't get released easily. So it's incumbent upon us to build that trust with shops. And so a lot of times, we can operate in a market for a few months before we make a single dollar because we're building goodwill with those shops. But once we're able to prove to them that we can pay them on time and that, we pay them the right amount, the amount that they should be paid on that claim, we're able to open that up. And that spreads like wildfire. Because when you build trust in an industry like that, people talk to their peers. So that's gone a long way for us.
You mentioned that for the big carriers, at this point, it's not enough of a pain point, but that you think it'll get worse. Why will it get worse?
Yeah. So let me. I'm going to answer your question with a question. Okay. How many people do you know that are going into the auto body trade, either as a body technician or a painter or a prepper or a detailer? Do you know anyone in your family or friend?
No.
Neither do I. Actually, I do now because my business partner, our co-founder Bing, his son is actually getting into the business. But it's crazy. Like out of even our co-founder group, and I've got teenagers. I think my 13-year-old might be considering a trade, but there is a trade shortage. We know this. Like even electricians, carpenters, plumbers, mechanics, and auto body has traditionally kind of been lower. The perception has been lower when people are thinking about going into a trade. And so, there is a correction happening, and more people are seeing that, hey, I can make money in a trade, and it's a dignified way to make a living. And, you're working with your hands, and not everybody's an academic. Not everybody's cut out to get a bachelor's degree. And there's great smart people that need to be working in trades. So there is a correction going on, but we're never going to catch up to replacement. It's not going to be a one-to-one. And we already have in the collision repair industry, and this has been a problem that's been going on for decades, is that we have technicians now that are staying on past the age of retirement. So they could have retired 5 years ago. And if you can imagine,
it's a physical job.
It's a physical job.
Yeah. Like we have people in insurance who are 80, especially agents, but this is a very non-physical job.
Like if you've ever built a deck or a fence, or you're on your knees for the weekend doing a project at home or something, you have a sore back the next day, right?
I'm the most white collar wimp ever. I put on knee pads today.
Okay.
To change the RAM on my gaming computer because at 42, if I kneel on the floor, my knees hurt.
It doesn't. You feel it the next morning, right? So, but imagine some of these technicians are working into their 50s and 60s, and now the environment's gotten better because part of what I want to do, for anybody that's an audience member today is I want to promote the trade because it's come a long way. If you go into a paint booth, they're wearing full respirators. It's safe now. They're not breathing in those chemicals. The best shops out there, they have hoists where the mechanics can work at, the technicians, I should say, can work at eye level, and they don't have to be on their knees. Or, there's lots of equipment and tool upgrades, ergonomic upgrades that have happened in the industry to make it safer, to build the longevity in. And automation is helping, just like in manufacturing. The way you built a car 20 years ago is different than how it gets built now. And a lot of it's done by robots. Right. And if you go into any auto manufacturing process, and so automation's coming into the collision repair industry, probably not at a fast enough rate. And so it's that rub in between of, automation and there being a trade shortage on the technician side. And again, consolidation will not solve the problem. And that's already been proven because the industry's had over 30 years to consolidate, and it's still very fragmented. So with all the moving parts that are happening, and some regions are stronger than others, some regions are stronger in the trades than others, but all those moving parts, it all comes back to the only way to replace that is through technology. So a combination of automation, the digital marketplace model where, if there's shops that are closing in a market, we're going to know who the shops are that are consolidating, coming together, or expanding their capacity, and we can move with that trend through a digital marketplace model. To be able to manage that as an insurance carrier long term is just not realistic or sustainable. The other side of that, Tony, is that traditionally on the insurance carrier side, the people who manage these programs, like the direct repair programs, the vendor programs, they usually come from the industry. it happens on the property side. You get, ex contractors that come in and they now write estimates for insurance companies, or they do audits. You get that in automotive as well, as other lines of business and insurance. And again, that's, as you can imagine, it goes back to the same root cause, less people going into the industry. So that knowledge transfer at the insurance company, once that person who's been managing auto body vendors for the last 30 years retires, there's not anybody that can come in and bring that same level of knowledge to the table. So everything's changing in how you manage your supply chain in this space and how you manage claims. And so, for us, we want to standardize and streamline as much as possible. We call ourselves a service-centric technology company because, I'm a claims guy at heart, and, we're made up of claims people. We know you can't fully remove the human element from claims. So customer service is a big, big focus for us. But we know that trend is coming faster and faster, and automation and technology is the only thing that's going to solve it. So eventually the top 10s will come to a place where, oh my gosh, all of a sudden I don't have repair capacity in a market where I thought I was okay, for various reasons, at the microeconomic reasons that are happening at the market level.
Very, very interesting.
Yeah.
Is there anything on the development pipeline? Like, I don't know how much the product itself, the marketplace is changing, but is there anything in the development pipeline coming in 2025 that you're excited about and can already talk about?
Yeah, super excited, and so we're actually on that note. Our technology team will be our fastest growing department, if you will, of the company. Our product and engineering team. Because of the product roadmap and the technology roadmap that we have. And so going into automation on the shop onboarding side, making that easier, less keystrokes for the shop to have to apply to become a member, for us to assess them. There's lots of AI solutions out there that are available, or things that we're going to partner with other companies or build or integrate on. So I'm really excited about the possibilities there and being able to streamline that onboarding and application process to a whole new level. And then, being able to give carriers more tools. So we have an algorithm that's proprietary that we built, and we're constantly, upgrading that algorithm, like Google, like Airbnb, any of these marketplaces that you interact with, based on the customer review scores, their performance on metrics, their response time, all of those things that we measure. We're going to be taking our algorithm to the next level so that we always have the best shops available on a market level that are ranking at the top. And we want to reward shops for their performance because we think the best shop should get the most volume. And so those are really exciting things that are on our roadmap. They're mostly technology focused, and we're currently in a venture. We're in our third funding round. So we went through the whole struggle of self-funding for the first few years and remortgaging our houses and bootstrapping as a co-founder group. And then we did an angel round with some industry veterans about 2 years ago. And then our first venture round we did about a year ago with Marked Ventures out of Boulder. Yeah, great. Nothing but great things to say about Marked, Parker and his team. And now we're going into our third round of funding, outside funding. And we're on target to close that within the next 30 days. And that will be so that we can get to work on growing and expanding and building these automation tools to streamline the process for shops and for insurance carriers. So that gets me out of bed in the morning. It's super exciting. There's a lot of pressure, but it's fun. Like, these are, we're solving problems. We're making life better for people who have claims. We're trying to take the pain out of that process. And Tony, I got to tell you, I've been blessed with amazing co-founders and an amazing team. And some of these people I've worked with for years in previous companies. we have a really interesting story, and I actually want to write a book about it someday. But like if you'll let me elaborate, it's really cool, kind of how the co-founders met. And little known fact, I don't know if everybody knows this, but Andrew Daniels, who's based out of Columbus, Ohio, he runs a little insurtech community called Insurtech Ohio, which has just recently been rebranded Scout Insurtech, right? They're doing amazing things. I think they're the third largest ranked insurtech community in the United States. Andrew started that on his own and then brought in a co-founder team, and they've done amazing things together to take that community to that level. And then Daniel Turgel, who runs Insurtech Denver, he was actually an early investor in CrashBay. But the funny thing is, I'm running Insurtech Canada. Daniel's running in Insurtech Denver, and Andrew's running Insurtech Ohio. And we all met through the Insurtech nerd community, right? That we're all a part of. And we started talking about this idea of bringing the marketplace model into the insurance claims ecosystem. And that was a big part of the CrashBay story. And it wasn't intentional. It all happened organically. Like we met as Insurtech community leaders and, doing some advising and consulting on the side and stuff like that. And CrashBay had already been started. Andrew came very early in the process. And so that Insurtech dynamic turned into something. And, that became a critical phase for our evolution. Bing Wong, our chief growth officer, I used to be his customer. So when I was a carrier, he worked on the collision side at a collision franchisor that services the top tens. And when I started CrashBay, for the first few months I was on my own, he was one of the first people in the room. A funny story about being a founder and being humbled early on. I rented a room in Halifax, Nova Scotia to do our first town hall, Tony. The capacity for that room was 200 people it could hold. You know how many people showed up? 3 people. 3 people. So I was presenting to a room of 3, in my head, it was a room of 200. And, this is before we had Zoom and podcasts, and it wasn't that long ago, but this wasn't popular at that time. And it was around an industry conference on the shop side, and we were trying to get in front of shops. Bing was one of the first people in the room, and I'll never forget that. And, we had that history, that customer vendor history from the past, and I knew that there was a dynamic there. And then Jeff Ketty, who is our chief strategy officer and our CFO, he also worked in the industry for some of the biggest franchisors. And Jeff, what Jeff can do with a spreadsheet would amaze you. The guy lives and breathes numbers. He's got a different brain, different personality. And him and I worked on some projects, some side projects. And I think we were doing a consulting call at like 9:00 at night one night and said, why don't we work on this together? So it all kind of came together. And the reason I'm sharing this with everybody is don't underestimate the value of these conversations like that you and I are having today, Tony, or the person you could
never know which one is going to open a lot of doors. Yeah.
The person your dinner partner at like an tech event that you're at a table with 10 people, or the person that is your customer today could be your business partner tomorrow. And so it all evolved in a very interesting way. But I wouldn't change it for the world. But like, I think about that, and I think about the rest of our team and the amazing people that we're attracting here. That's my validation that we're on the right track. I know where the industry trends are going, but it really comes down to the quality of the people that are on the CrashBay team. And I consider myself very blessed to have such amazing people on our team.
Congrats on all the success thus far. And thank you for coming on the show. When this goes live, we'll tag both you and the company on LinkedIn. Thank you so much,
Tony. If I can, before we close,
of course,
I want to give you a shout out. So the work that you're doing, you've you built this reputation, this image, this persona around this guy. And I've had a chance to talk to you in a one-on-one situation. And, you know, this makes you seem larger than life, but you really are like a down-to-earth person, easy to talk to. And I want to recognize you for the impact you're having in the industry. I didn't realize that you were into the hundreds of episodes.
600 and
700?
We're 620 just about.
It's amazing. Like, so this is not a plug for me, but I do a podcast too, but I've done like 30 interviews, and I get stressed out preparing for those interviews because you want it to be perfect, and you want to get the message out there, and you want to highlight the person sitting across from you, and you want to do a good job, and you care, Tony, and you're making an impact, and you're reaching a lot of people, and sometimes it's thankless, and I know you're not in it for the money. So thank you for what you're doing for the industry, for getting content out there and giving people like us an opportunity to talk about our story. So.
Thank you. I have a ton of fun playing this weird role that I play within the insurance and insurtech world. And it doesn't feel like I work. I love what I do, and it's a ton of fun. So anyway, thank you.
You do an amazing job. Thank you, Tony. Appreciate it. This was a pleasure.